One stock that has proven to be a free cash flow machine over the past decade is Mastercard Incorporated, stock ticker MA, currently trading at $412.79 per share. And if we go over to the charting tab here on Seeking Alpha and look at the past decade, we can see they have way outperformed the market. They're up around 418%. Meanwhile, the S&P 500 up around 157%. We also have great news coming from this company. Over the past few days, we can see they declared a 66-cent dividend and they okayed a new $11 billion stock buyback. Now, that new dividend payment is actually a 15.8% increase to their previous dividend payment. And if we jump over to the dividend history, we can see this company has a very rich history of increasing those dividend payments. You can see it jumped up from 57 cents to 66 cents most recently, but 10 years ago, they were paying out around 3 cents per share. So that is massive growth, going from 3 cents all the way up to 66 cents per share in just 10 years. That's absolutely phenomenal. So when we jump over to the dividend growth tab, we can see here we have the 3-year dividend growth rate sitting at around 12.5%, the 5-year at 18%, and the 10-year dividend growth rate sitting at a staggering 27%. That is absolutely phenomenal. Now, one thing we do need to keep in mind is if we jump back over to the summary tab, we can see they do have a very low starting dividend yield sitting at 0.64%. So again, the starting dividend yield, nothing too crazy, but obviously those dividend growth rates are amazing. Now, if we jump over to the dividend safety tab again, you're going to like what you see. We can see here cash flow payout ratio forward looking sitting at around 19%. That is an extremely healthy range, and for the trailing 12 months, sitting at around 19.83%. It's pretty much exactly where we would want to see it at. Now, massive free cash flow growth along with low payout ratios is only made possible by one thing, and that is growing free cash flow per share. And that's something I mentioned at the beginning of this video. This company is a cash flow machine. So if we jump to the bottom of the statement of cash flows right here, we can see our free cash flow per share over the past decade. And if we look at it charted out, we can see really solid growth over the past decade, going all the way from $3.17 in December of 2013 all the way up to $10.43 in December of 2022. Again, that's exactly what I want to look for in a business. It's one of the most important metrics in my opinion. Now, the big question we need to answer when we see massive free cash flow growth is how is a company rewarding their shareholders with their growing free cash flow? And keep in mind, with free cash flow, there's 5 different things you can do. You can reinvest back into the business, which is a great option for companies looking to grow. You can do things like pay down debt, buy back shares, pay out dividends, or attempt mergers and acquisitions. But in one of Mastercard's reports, they actually give us pretty good insight into how they use their free cash flow in 2022. If we come down here, we can see they had around $10.7 billion capital returned to shareholders. $1.9 billion of that was in dividends being paid out, but $8.8 billion was due to repurchasing shares. So they are aggressively buying back shares, and like we just saw with their most recent announcement, they're planning on buying back $11 billion more in shares. So if we jump back over to Seeking Alpha, let's see how shares outstanding has changed over time. If we go over to the balance sheet, we'll have to scroll down near to the bottom, but around right here, we can see total common shares outstanding. We can see how this is steadily declining over time. And again, this is a phenomenal way to return value to shareholders. So it's clear they've done a great job of reinvesting back into the business, but also buying back shares and increasing those dividend payments at a rapid rate. And if we jump over to the profitability tab, one of the things you'll notice is this company is unbelievably profitable. Look at that net income margin for the trailing 12 months, sitting at 44.85%. They have some other really impressive metrics, such as return on total assets, sitting at 27.55%. Net income per employee, I don't look at this often, but it is still pretty amazing to see for Mastercard, sitting at over $365,000. Another advantage that Mastercard has is it's considered a duopoly along with their counterpart Visa. Visa is very similar in structure, but there are a few slight differences, but we are going to focus on Mastercard in today's video. But one of the things you'll notice is if we look at the market share by purchase volume for both of these companies, Visa makes up around 52.6% of the market share. Meanwhile, Mastercard is sitting at around 23.7%. So they are a little bit behind Visa in that standpoint. But what's interesting about this is if we jump back over to Seeking Alpha, let's look at the valuation. We can see our price to earnings non-GAAP for the trailing 12 months for Mastercard sitting at a very high number, 35. Now, what is it for Visa? Maybe it's justified. Maybe they both sit at a high price to earnings. But we can see for Visa, it's sitting at around 29.03. So from a price to earnings perspective, it looks like Mastercard is a little bit more expensive than Visa. So the question we need to answer is Mastercard today trading at a good value at $413 per share? Now, to get a better idea of this, we are going to jump into my stock valuation spreadsheet where we'll be looking at a few different valuation models like always. So if you'd like to join a community of of dividend investors and get access to all of my spreadsheets, then you can head over to my Patreon page at the link in the description. Okay, let's go ahead and come up here and plug in MA for Mastercard and hit enter, and you can see all of this data will automatically load in. We already have looked at our dividend metrics. We can see the 20, 50, and 200-day moving averages all up by a decent bit. Analysts going to have a target price of $445 per share for this company, institutional ownership around 78%, and a beta of 1.08, meaning you'll see a little more volatility than that of the market. Now, the first valuation we'll look at is Graham's valuation, and this basically values a company based on the projected earnings growth. This is a valuation invented by Benjamin Graham, one of Warren Buffett's mentors. So we have our forward-looking earnings per share for Mastercard sitting at 12.5. We then have our growth rate projection, which is sitting very high according to analysts at around 17.5. And again, I do have to agree with them. I do expect high growth rates from this company. But then we divide all of this by Y, which is the current yield on AAA corporate bonds. At the time of this video, it's sitting at 4.96, quite a bit higher than it's been on average over the past 5 years, and this will drive down the valuation quite a bit. We come to an intrinsic value of $271.67 per share. Over the past few years, this has typically been closer to around 3 or 3.5, and if that was the case right now, you can see this valuation jumps up quite a bit, but with current market conditions, this valuation is getting pushed down quite a bit. Now, the next valuation we'll look at is the multiples valuation. While there's not perfect scenario for the multiples, obviously we have a solid comparable with Visa, and we saw Visa is a little bit cheaper according to price to earnings than Mastercard. We can also use automatic data processing. It's not a perfect comparable, but I do think it could make sense in this scenario. With the average PE of these companies sitting around 29, when we multiply that by Mastercard's earnings per share for the trailing 12 months, we come to an intrinsic value of $250 a share. Now, the last valuation we'll use is the dividend discount model, and this is where Mastercard really shines. Again, we just plugged in the updated dividend payment, but we can see I plugged in all the dividend payments over the past 5 years quarterly, so we can see those yearly dividend payments and those dividend growth rates over the last few years of 10%, 11.3, 16.3, and 15.8, average growth rate of around 13.37%. Moving forward, I'm projecting a dividend growth rate of 8%. I think that is easily obtainable for a company like Mastercard. Discount rate of 8.5%. That gives us a dividend discount model price per share of $570.24, a really high valuation with the dividend discount model. So when we jump over to the output tab, we can see the three valuations that we used in this scenario. We have Graham's, multiples, and dividend discount model. Average those three together, and we come to an intrinsic value of $363.91, a little bit below that current trading price for this company. So with a 10% margin of safety, it looks like our acceptable buy price would be around $327.52. Now, something I want to make perfectly clear is this is obviously a phenomenal company. They have phenomenal free cash flow growth over the past decade that I do expect to continue. Their profitability metrics look absolutely phenomenal, and their growth rate projections remain very high. But with all that being said, it does appear that the company is a little bit expensive at its current prices. In fact, I did some digging into Mastercard's recent insider trading, and we can see that over the last year, we have 10 instances of insider selling Mastercard stock, with only one instance of them buying the stock. So again, while this is a pretty commonly owned stock by large institutional investors and super investors, it's pretty clear again that I think it's a little overpriced at its current value. That's not to say that it still couldn't be a good long-term play at its current prices, but personally, I would like to buy in at a little bit of a better price. Again, personally, I actually own Visa. There's a couple of things I like Visa more than Mastercard. There's a couple of reasons I like Visa more than Mastercard, so if you want me to make a video comparing the two, just let me know in the comments down below. But there you go, there is an analysis on Mastercard. Go ahead and let me know what you think in the comments down below, and like always, if you'd like to join a community of dividend investors and be able to download any of my spreadsheets, you can head over to my Patreon page at the link in the description. You can also get a huge discount to Seeking Alpha at my link in the description. So with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.